Hello, everybody. This is Alan Ellman, the blue collar investor, welcoming you to this BCI podcast number 94. This one is titled Analyzing Buy Right Net Debit Limit Orders. And we're going to be using a real life example with MDC Holdings, Inc., which trades on the New York Stock Exchange under the ticker symbol MDC. So let's launch this podcast by defining what a buy right net debit limit order is. First, it's a way of executing a covered call trade. And what we do here is we buy the stock and sell the call option in one simultaneous trade. Now, we have to buy the stock, so we're long the stock, and we sell the option. So we're short the option. So what we do to create that net debit limit order is we deduct the premium, which is a credit, from the cost of the shares, which is a debit. That figure that you come out with is the net debit limit order. Now, we use these buy right combination orders instead of legging into the covered call trade. And when we leg in, we buy the stock first in one order. And then once that order is executed, the second order is to then sell the option. So once we are covered or protected by buying the shares and therefore knowing our cost basis, we then sell the option. Those are the two ways to enter a covered call trade, either via this buy right combination form, which is a net debit limit order, or by legging in, buying the stock first, and then selling the option. So let's now turn to a real life example with MDC from February 2020. Now, on the 13th of February, the order was executed, and the March 20th, 2020, so 5-week call option was traded. And we used the $45 strike for a net debit limit order of $43.15. In other words, to enter this trade, it costs us $43.15 per share, $4,315 per contract. So that $43.15 represents the cost of the shares minus the option premium that was generated. We'll get to the actual brokerage form in the next slide. And that will show the net debit limit price, again, $43.15. It will also break that down into the price of the stock that was purchased and then the option sale price. So if we deduct that option sale price from the purchase price of the stock, it will result in that $43.15 net debit limit price, which is, again, the stock price minus the option premium. So for those of you that are actually also watching this podcast, for those of you not just listening, I'll describe it to you. On the top of the brokerage trading form, and this particular slide, it's highlighted in yellow, the net debit limit order, as I said, was $43.15. And it has a notation that applies to both legs combined. Now, it then goes on to break down the stock and the option side of the trade. In this particular case, 100 shares per contract were purchased at $44.33. So that would represent the debit. Now, we also had a credit from selling that $45 call strike 5 weeks out, and we generated $1.18. So if we subtract $1.18 from the $44.33, that's where that $43.15 comes into play. Now, if we took a look at this trade in terms of the initial time value structuring of the trade, we put this into the multiple tab of one of the BCI calculators. We have the stock price at $44.13. We have the option premium of $1.18 and the 45 strike 5 weeks out. That will result in an initial time value return, or ROE, of 2.7%. To put that in perspective, we would multiply, since it's a 5-week return, by approximately 10. So it'd be higher than a 27% annualized return. Now, since we sold the out-of-the-money 45 call, remember the stock was trading at 44.33, there was an opportunity for an additional 1.5% 5-week return from share appreciation if MDC moves from 44.33 up to that 45 out of the money strike. So there, when you combine those two, there's a potential for 4.2% return, which annualizes out to 42.6%. So you can see in a bullish market environment, this is a great opportunity to generate a significant amount of a 5-week return. So when we're looking to determine, when we do these buy right orders, what our cost basis is, what we have to do is we have to refer to the brokerage statement. And the brokerage statement will tell us that the share price was executed at 44.33. That is our cost basis. And that will also be the figure that we use in our position management opportunities. So we have an opportunity here to work with a stock at a cost basis of 44.33 that returned a very, very significant 5-week return. Now, if we were looking for our cost basis for tax purposes, that's a completely different ballgame. And that may require us using a different stat for our cost basis, depending on the ultimate outcome of the trade. However, when we are executing our trades and managing our trades, 44.33 is the number that we're looking at. So let me summarize now. Buy right trades are also known as net debit limit orders. That's because we're going to have a net credit. The price of the stock is much greater than the option premium that we're going to generate. Now, our brokerage statement will do all the legwork for us. It'll break down the share cost and the option premium that resulted in this net debit limit order. So it'll be right there in front of us. Buy rights are particularly useful when we can't be in front of our computers to initiate a covered call trade. Maybe we want to initiate a trade and we'll be traveling that day or working long hours where we're not available during normal market trading hours. So we just initiate a net debit credit limit order, use the buy right combination form, and we will get it at the net debit limit order that we request, or the trade will not be executed. Before I go, I just want to mention my favorite and what I consider our best educational package. It contains everything. The BCI package has 6 video courses, 6 BCI calculators available only at the Blue Collar Investor, and 5 of our best-selling books in ebook format. It also includes our annual premium subscription, which is good for 13 months. So all of that in one package, which can be found on our website. Just go to www.thebluecollarinvestor.com and then look on the pages for the BCI package. Click on that. It'll give you some more information. There's also a video that I produced that describes in detail everything contained in this package, which we offer when you get everything in one package at a 20% discount for $997, which is about $240 less than if you bought everything separately. So, ladies and gentlemen, there you have it. That's our BCI podcast number 94, analyzing buy right net debit limit orders. Folks, I hope you enjoyed this podcast, and most importantly, I hope it puts cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.